Well, welcome to 2022. I'm Beth Riebenstorff, founder of the Reedy Homes team, bringing you real estate beyond expectations in the Phoenix metro area. So, what does 2022 have in store for us as it relates to real estate, nationally and locally? We'll start with a common topic of conversation: interest rates and how that might affect housing markets. This from Bill McBride from Calculated Risk. It's possible that rising mortgage rates will slow the housing market, or the Fed might raise rates sooner than expected due to the recent pickup in inflation. But I believe one thing is certain: inventory will tell the tale. There is so much speculation in the market right now. What with mortgage rates, the Fed, inflation, coronavirus, Omicron, what's the impact on real estate? And the reality is that the most important factor every year in real estate is inventory. And that will be especially true this year. This is a graphic representation that looks at housing inventory year over year. It compares inventory in December 2020 and where we are in December 2021. And the national average is almost 27% down year over year. All across the country: Idaho, 55%, Wyoming, 31%, Florida, 48%, North Carolina, 33%, South Carolina, almost 40% down in inventory. Another way to look at things is the months of an inventory. Starting in January of 2019, there was about a 4 month supply, and it started to dip down in 2020, spiked back up during the lockdown in April and May of 2020, and it's been depleting ever since. It's been edging lower and lower each year, with record lows in December and January of last year with under a 2 month supply. And we're right near that currently. But the bottom line is, we do not have what is needed to satisfy demand. Couple that with an increase in buyer activity, and the story is very clear. Taking a look at showing time activity, buyer showings were greater in November than last November. And showing activity, well, it's the leading indicator of real estate activity. If people aren't scheduling showings, we see a correlating reduction in home sales. Here's a look at showings over the last 5 Novembers: 2017, 18, and 19. Well, those would be the last three normal years for real estate. And we see that 2020, well, it shot up. One theory was it would not continue and might even decline, but that was not the case in 2021, even during the traditionally slower holiday months. That high demand and low supply has had a serious effect on home equity to the positive. CoreLogic's third quarter home equity report showed that the average homeowner with a mortgage gained $57,000 in equity as of the third quarter. 31.1% is the year over year percentage for increase in equity in the US for homes with mortgages, and 3.2 trillion, well, that's the rise in overall equity amount. The equity in real estate right now across the country is unreal. US households owned 36.8 trillion in owner occupied real estate. 11.5 trillion was debt, and the remaining 25 trillion in equity. According to Odetta Cushy, the average homeowner has $294,000 in equity. Now, while the national average for year over year appreciation from last year to this year was 57,000, it varies from state to state, the lowest being North Dakota at 15,000 and the highest being California at $119,000 in equity. Arizona came in at 92,000, Idaho came in at 82, Nevada 80, and the state of Washington 96,000. The equity picture is a big part of the conversation around the housing market. And another important element is foreclosure and forbearance. According to CoreLogic, foreclosures are expected to remain quite low. Forbearances have actually fallen below 1 million, just under 1 million. About 890,000 mortgages are actively in forbearance. That represents about 1.6% of active mortgages. Because there are options for homeowners, that last resort of foreclosure is much less likely. So, what are expectations for mortgage interest rates in the future? You can see in this chart from Fannie, Freddie, NAR, MBA, what they're saying about 2022 broken down by quarter: Q1, 2, 3, and 4. Somewhere between 3.5% and 4% in the second half of the year. That's the projection. The last 10 years, we've been between 3 and 5% in the average 30-year fix. So, still great financing for a home. And then the final question, the big one: have prices peaked? This table shows FHA CoreLogic and Case-Shiller data that looks back at the month from the previous year compared to the current year. So January starts out at a historic high appreciation of 10%, and then you see it continues to rise each month. Again, this is a measure of year over year. This shows that prices, well, they may have peaked. A good next question is, have they peaked or have they plateaued? In other words, might appreciation drop from 18, 19, 20% down to 5% overnight? Probably not likely. But here is what the forecasters are predicting for 2022 home prices. Currently, the average is about 5.2% among them all. It ranges from 7% to 2.8%. And we'll see how these forecasts change in the future based on closings in the next 30 days and the prices that those yield. One thing to remember about this graph is that that line going down is not depreciation, it's still appreciation, just less appreciation than the year before. A better way to explain would be decelerating appreciation, meaning it's still appreciating just at a slower rate. Think about a car going down the road decelerating, still moving very fast, just not as fast as moments ago. For our local Phoenix metro area, here's a look at the price per square foot. Under 300,000, well, in 2020, it was 143, 2021, 162, and 2022 is starting out at $180 a square foot. In the 300 to $600,000 range, 2020 had it at 180, 2021 212, and 2022 is up to 239 a square foot. In the 600 to $1 million range, 2020 saw 236 a square foot, 2021 260, and 2022 at 278 a square foot. And for over $1 million, 2020 started at 433, 2021 was up to 493, and 2022 so far is up to $622 a square foot. And the all important inventory number, let's take a look at active listings. Well, under $300,000. In 2020, there were 4,072, 2021, 1,734, and 2022, 657. And that tells the story because the under 300 have all moved up to the over 300. In the 300 to $600,000 range, which means some of the under 300s joined this category, in 2020, it was 4426, 2021, 1980, and 2022 shows an increase to 3019. And again, that's because of the under 300 moving up to the price point of over 300. And the 600,000 to a million in 2020 it was 1560, 2021 868, 2022 is up to 1112. The over 1 million, 2020 saw 1636, 2021, 1027, and 2022, oddly enough, 712. Well, there you have it, the January 2022 Phoenix metro area market update. Hope you enjoy this. Share it with your friends or any interested parties, and we will talk with you next month.